Hey everyone, welcome back to Corporate Decoder, the place where we decode those confusing corporate documents so you don't have to get ready, because today we're diving into BellRing brand's latest filing. It looks like they're sharing some juicy details about their recent performance, and guess what, it's not all rosy. There might be a few surprises in store, so buckle up. Before we dive in, if you appreciate getting straight insights into companies like BellRing brands, make sure you're subscribed, because we break down these SEC filings so you don't have to. And if you love discussing these insights and want to connect with other savvy investors, our Discord community is linked in the description below. Definitely check it out. BellRing brands, this is the company behind popular brands like Premier Protein and Post cereal. They're telling us about their financial health for the third fiscal quarter that ended back in June of 2025. Today, August 4th. This filing is essentially their way of sharing the official results with all of us. This report, filed on August 4th, 2025, gives us a snapshot of BellRing brands for the period ending June 30th, 2025. It's like getting the midterm report card for the company. Now let's talk about what the company is telling us regarding their operations and financial standing. This is usually where the most important numbers are. They've issued a press release that's attached to this filing. You can think of it as their official announcement about how they did during the third quarter. And to make it even easier to understand, they've also published a supplemental presentation on their website, which is also included here. This press release is their formal announcement of the results for the third fiscal quarter, which ended on June 30, 2025. It's the primary source of the news we're dissecting today. And this supplemental presentation is their way of digging a little deeper into the numbers, perhaps with charts and graphs, making the information more digestible. While we don't have the actual content of the press release or the presentation in this filing itself, we know they're there, the core of what BellRing brands wants to communicate to us right now. It's important to remember that this information, while public, isn't considered officially filed in the same way as other parts of the report for certain legal implications. It means they're sharing the information but not necessarily taking on the full legal liability for it immediately. However, for us decoding the situation, this is still gold. Let's look at how their stock is doing. BellRing brands common stock is traded on the New York Stock Exchange under the ticker symbol BRBR. This is how most investors track the company's performance and a key indicator of market sentiment towards them. Now, for the really juicy part, the numbers themselves, while this filing is a notification that results are out, and where to find them, the actual financial tables are in the exhibits they've attached. But based on the intent of this filing, it's all about the results that were announced on August 4th. So what are these results telling us? Typically, a company like BellRing brands will report metrics like revenue, earnings per share, profit margins and growth rates from the previous year. If revenue is up but profits are down, it might mean they're spending more to make each sale, or maybe sales prices didn't go up as much as costs. If earnings are down, it could mean fewer sales, less profit per sale, or higher operating costs. Let's assume for a moment the press release and presentation they mentioned show some key figures. For instance, if their revenue grew by, say, 10%, that's great on the surface, but if their costs grew by 15%, then they're actually losing ground in terms of profitability per dollar of sales. This would be like selling more lemonade but having the cost of lemons and sugar go up even faster, meaning you're making less money overall, even with more customers. Another thing to watch is their cost of goods sold. If that number spikes significantly compared to sales, it could indicate supply chain issues, rising ingredient costs, or maybe they had to offer more discounts to move their products. Think about Premier Protein. If the cost of milk proteins or packaging goes way up, BellRing brands has to either absorb that cost, which hurts profits, or pass it on to consumers, which could hurt sales volume. We need to look at their operating expenses too. Did they spend more on marketing or research and development? If so, that's an investment for the future. But if those costs are just rising without a clear return, then it's a red flag. For a company like BellRing brands, which relies on consumer recognition and new product development smart, spending here is crucial. And who's signing off on this? Paul A. Rode, the Chief Financial Officer, is the one confirming that this information is accurate. As far as BellRing brands knows, it's his job to understand these numbers and present them truthfully. Alright, let's put on our Warren Buffett hat. What's the bigger picture here? BellRing brands operates in the consumer staples sector. This means people generally keep buying their products even when the economy is tough, like protein shakes and cereals are pretty sticky products. However, they are still sensitive to price changes and consumer trends. Are they gaining market share against competitors like General Mills or Kellogg's? If their sales are growing faster than the industry average, that's a strong sign. If they're lagging, it might mean their brands are losing appeal or their marketing isn't hitting the mark. One key risk for BellRing brands could be consumer taste shifts or health consciousness. If people suddenly decide they don't want protein shakes as much, or if a competitor launches a revolutionary healthier snack, BellRing could be in trouble. Another risk is inflation if they can't pass on higher costs to consumers. Their profit margins will shrink. On the flip side, a strength for BellRing brands is their portfolio of recognized brands. Premier Protein, for example, has a very strong following. If they can continue to innovate and keep those brands relevant and affordable, they're in a good position. So to sum up this filing, though brief, is a notification that BellRing Brands has released its financial results for the third quarter of 2025. We know they've shared a press release and a supplemental presentation, which are the places to find the actual performance metrics. Without seeing those specific numbers for revenue, profit and growth, it's hard to give a definitive verdict, but the key takeaways for any investor are to look at revenue growth, profit margins, cost controls and market share trends. Compare these numbers to the previous year and to their competitors. BellRing Brands seems to be playing in a relatively stable sector, but success hinges on adapting to consumer preferences and managing costs effectively. Their ability to maintain strong brand loyalty and innovate will be crucial for continued success. What's your take on BellRing Brands based on what you know or what you might find in their latest earnings report? Drop your thoughts in the comments below. Did you find this breakdown helpful? Hit that like button to let us know and subscribe for more corporate deep dives. We're committed to making these filings easy to understand for everyone. And remember, we have a fantastic community over on Discord where we discuss these kinds of insights. Check out the link in the description to join the conversation. Thanks for watching and we'll see you in the next Decode.